Hi folks, Andrew Packer here and welcome to Trading Tips. Today I want to share with you 3 tips for anyone who's just getting started with investing, some sort of beginner's tips. And these are things that I sort of kind of knew a little bit reading about going into investing, but you'll really experience it as you start putting your money to work and as you start thinking about how to be an investor versus just reading about it and just thinking about the academics of it. So first and foremost, when it comes to investing, it's a very open-ended concept. And a lot of people can sometimes have problems with that. We get used to having certain things in our life, having our house and our life just so, having our career and kind of everything sort of set into a nice little pattern there and making changes from there. But when it comes to investing, it's a big open sandbox that you can do all sorts of things in, and it can be a little intimidating to start with. But the most important thing is that you are getting started and that you are going on this journey. And it is a journey. It's essentially a marathon over the course of your whole life. It doesn't need to be a sprint. You don't need to necessarily rush through it or otherwise try to force things to happen, because that's usually going to lead to bad results. So that said, let's look at our first step. And our first step is actually pretty simple and I think pretty important, and it's just to get started and to start small. I'll often hear about financial experts or personal finance folks who say pay off your debts and pay down your mortgage and build up your bank account before you start investing. The fact of the matter is, I started investing when I was a teenager, so I didn't have a mortgage. I didn't even really have a job in the traditional sense. I'd done a lot of stuff as a kid to make money, and then later as a teenager I started working a minimum wage job, and that helped me get investing as well. But the earlier you start, studies show the better your returns are going to be over time. It gives you more time for your wealth to grow, and if you're doing it right, it gives you more time for your wealth to compound. Over time, if you can invest for a long enough time period, the amount of money that your previously invested money has made for you is just going to continue to grow like a snowball rolling down a hill. It's a metaphor that Warren Buffett uses a lot, and it's perfectly apt. And he's getting into his 90s, showing no signs of stopping, but he also started incredibly early. So whatever you can get started with, that's a great place to do it. So get started. Even if it's a few $100s, you can buy funds. You can directly purchase stock of many dividend-paying companies through what's called a DRIP plan. You really don't need to be impeded. You don't need to wait until you have $5,000 or $10,000 or some other set amount like that. Getting started is the absolute most important thing if you're going to begin to invest. So that's step 1. Looking at step 2. This one's going to be a little controversial, but I think it's one that's been incredibly important for a lot of people to really understand the investment process. And that's actually, get a loss or two in there. You're going to learn a lot more from losing money than from making money. And if you get your loss out of the way early in your investment career rather than later, it's better to lose 20% on a trade or 50% on a trade when you only have a few hundred or few $1,000s invested in something. You're going to learn just as much as if you had a $100,000 loss or a $1 million loss later in life without the stress of that 6- or 7-figure drop in wealth. And when I was first starting to invest, I got invested into a fund, and I just wasn't happy with it, because even though it had all these great companies in it, it also had all these terrible companies in it that were just dragging on the performance of it. And I took the loss on that, took my money out, and I started out with individual stocks with just 2 stocks in my entire portfolio, which, when you're young, it's not as risky as it sounds. For where I'm at in my life now, that's probably a little riskier. If you're getting started a little later in life, just having your money into 2 stocks, don't recommend that. But this is where you're going to get that learning process out of the way early on while it's small. So getting that out of the way, taking care of that, I think that's really the best thing that you can do to learn more about investing than any book is going to teach you. When it's your own money on the line, and when you learn, hey, this is why I lost money on this trade. I got aggressive, I bought too early, I bought a call option and the stock didn't move up enough, you're going to learn everything that you need to know over time. And it's better to learn from losses while they're early, while they're small. Get them out of the way. Finally, and I think some people will also find this a little bit controversial, as sort of a beginner tip, but it's just the idea that you want to get comfortable with using leverage. And that's because with leverage, you can magnify small returns into big returns, and you can help grow your portfolio more quickly. So using the example of a call option, say I had a chance to buy 100 shares of a stock at $5, and that would cost me $500. that's pretty good. But let's say I could buy an option on that for only $1. Now for the same $500, I could control 500 shares instead of 100 shares. Or I could sort of split the difference. I could buy 3 option contracts, spend $300, and still have $200 in cash. And then if shares moved up a lot, that option would probably increase much more on a percentage basis than the shares themselves. So that's the idea of leverage is one that, you know, people, either they really get it or they really don't. They really like it or they really don't. Leverage can work against you in a lot of ways, of course. A lot of options will end up expiring worthless, and you do have to really keep an eye on those types of leverage trades. But if you're just getting started out, it's a good way to ensure that you're getting the most out of your portfolio and getting the best value out of it. Now, obviously, you know, leverage can mean different things to different people. If you want to go full leverage, some trades are going to work out great, some aren't. This is where you're going to want to be very specific, and you're going to kind of want to pick and choose some of the companies that you invest in. Technology companies, for example, are, you know, a much better leveraged play, where buying a call option makes more sense than buying shares while you're still getting started out as an investor. If you're, you know, buying a utility or a telecom, those shares probably aren't going to have big moves either way, so using a leveraged play there isn't going to necessarily work out as well for you. But there are also some other things you can do in the options market, like selling covered calls or selling puts, that helps you get more return out of your position with the capital that you have invested. And even if you can get an extra, you know, 5 or 10% returns out of your portfolio that way, again, over time, it's like starting small and giving yourself more time. You know, the bigger the return and the longer the time frame, the more money you're going to make in the market. So these are, I think, 3 very important steps for beginners in the market that don't necessarily get a lot of talk out there, kind of in the personal finance world, that I think can really give you, you know, a much more success in investing. So just start small. You know, even if you've got other issues to deal with, you know, finance-wise, just get started. That's the most important thing. You know, learn from your losses early and quickly, and you know, just start getting comfortable with the idea of using leverage, because you know we live in a world where it's possible to do that, and you can really beat the pants off a lot of more traditional investors doing so. So that'll wrap things up for this edition of Trading Tips. Until next time, I'm Andrew Packer saying stay safe and stay solvent.